Hello again and welcome back. Now, central bankers in the Arab and Gulf countries have tried to reassure investors, promising to inject liquidity into the markets. They've already lowered interest rates in Kuwait by 1.25 percentage points and pumped $14 billion into local markets in the UAE. Going beyond conventional wisdom, some Gulf investors are finding creative solutions. For example, in Kuwait, a stockbroker filed a suit to compel the government to temporarily close the exchange to curb losses. Other suggestions include widening the application of Islamic banking to minimize losses and eliminate secondary trading in bad debts, and finally, diversifying investment into less vulnerable regional and other Arab markets instead of the traditional Western countries. Well, we're joined by our guests in Cairo, Mohammed Taimur, in Beirut, Jad Jaban, and joining us now from Dubai, Amir Hamid, who's a professor of economics and president of Jazeera Research and Development. Mr. Hamid, if we could start with you, let's just examine the potential of these alternative ways forward. First of all, shutting down the Kuwait Stock Exchange, it's happened in Russia briefly in various places. Is this something that you would advocate that would work?
Yeah, well, the measures that have been taken so far, we cannot consider them as long-term measures. What we need in the long term is more or less some kind of structural adjustment for the different Arab economies and restructuring of the economies to establish solid grounds to avoid any problems in the past. However, what we have seen today, that the measures that have been taken, including lowering the interest rate by the Central Bank of Kuwait, for instance, they have positively affected most of the markets. We have seen the markets in Dubai, in Egypt, in Kuwait, and in Qatar going up today, with maybe the exception of Saudi Arabia, which went down by 1.5%, which I would say is not that bad, actually, in light of what happened the last week.
Jad Shaban, what about this concept that the method of Islamic banking could be the way forward as a means of kind of ensuring against the fluctuations, wild fluctuations that we've been seeing in Western markets?
The method of Islamic banking is just based on risk-sharing agreement between the depositors and the banks, or the investors and the banks. It's based on a non-interest agreement, but also a kind of a cost-sharing and risk-sharing agreement, which in these circumstances may not really work, because we're beyond the point where few corrections in the short term can work. It's a time to reflect. I kind of tend to look at these problems as a signal that something is going wrong, and that Arab stock markets and those managing them need to really think, why are these markets not reflecting strong fundamentals and fluctuating in a way that makes them look completely dependent? And this is strange. This is a situation that requires thinking a bit in an innovative way, and trying to maybe reconsider companies that are listing themselves on the stock markets, and seeing who are the companies that really qualify with strong dividends, strong growth prospects, and allowing them to continue to be indexed. I think a rethinking of the index is something that should be envisioned instead of relying on short-term fixes, if you want.
Dr. Taimur, no artificial trading in bad debts would be a good thing for Western markets to get stuck into, wouldn't it?
Yes, it would, but it doesn't apply much to our region. Mainly here we're speaking about equities, and dealing with huge fluctuations in equity, I think, in the Middle Eastern market will not settle down unless you regain confidence again. And unfortunately, we will have to get the cue from the Western stock exchanges. I don't think we will see a settlement down to basics in the stock exchange in our area until we see Wall Street and London and Paris and Frankfurt becoming again, not going up, but at least the trend that's going down very fast stops, and we see some kind of a settlement down.
But there's no sign of that yet, is there?
I beg your pardon?
There's no sign of that as yet, is there?
No, it is. I think today, particularly after the IMF speech that was done today, things may begin to settle down. I think we are near the end now, or near the bottom of what we have seen. And I don't think there are solutions that are applicable to all markets in the same way. For example, in Egypt, we don't have a liquidity problem. So, I mean, pumping liquidity in the market will not do much. At the same time, again, in Egypt, we can think of the government trying to interfere in a subtle way, because in general, I'm very much against the government interference in stock markets. But for example, the pension funds in Egypt, they have very minor amounts of their money in the stock market, I think 2 or 3%. If they are allowed to move and take advantage of the fact that now the prices are very attractive, maybe they will help stabilize the market, and we would begin to see more rational thinking coming back.
Mohammed, here in Qatar, we're surrounded by half-built buildings and skyscrapers, a huge amount of investment into Doha, the capital city here. If foreign investment is pulled out of countries like Qatar as the crisis continues, what kind of effect will that have on the region?
Very interesting question. Last night, I was visiting a Cityscape exhibition in Dubai. And I have to admit that I was surprised by the hundreds of projects coming up, real estate projects coming up, not only in Qatar, but in Dubai, in Abu Dhabi, even in Oman. And people are buying in spite of the fact that we have all these bad news or negative news spreading all over the world. But people are still buying in the Gulf, mainly in Dubai. We have to admit that if we look at, it's very important. I agree with Dr. Taimur first that markets in the Middle East are a sponge of what's happening in the big markets of the world, like America and Europe and Japan and so on. But it's very important for a theoretical and analytical standpoint to separate between what's happening in the world and what's happening in the Arab markets, the Middle East Arab markets. Because if we take the example, I will go back now to the real estate in Qatar, but if we take an example of Egypt, for instance, the problems of Egypt did not start last week. They did not start with the fall in Wall Street. The problems in the stock exchange in Egypt started on May 5 with some internal or local economic government regulations that were taken in a hurry and affected the market, which dropped in one day from 12,000 points to about 9,000 points. And then later on, the other things came. So this is Egypt. If we talk about Dubai and maybe Qatar at the same time,
let me just bring in Dr. Taimur at that point. I can see you're not in agreement with this.
No, I'm not saying no. Actually, I do agree that what happened on the 5th of May was some of particularly the removal of the tax incentives for offshore companies, was not at all a smart thing to do by the government. But the index did not drop from 12 to 9,000 in one day. It took quite some time for this to happen. That's the only thing I wanted to refer to.
Okay,
it did not go down by 25% in one day. It took it. Actually, it's now 50% below what it was in May, but this happened gradually, except, of course, of the beginning of this week when we had a drop of about 20% or a little bit more.
Okay, well, let me pose this question to you. We've got big problems all over the world. Right now, if you've got money to spend and you don't want to put it on the stock market in this region, in the Middle East, where would you put that money? Mohammed, first of all.
Where would I put that money? That's a very difficult question. I would go to a haven center like maybe Switzerland or Japan or something like that, actually, yeah. This is more or less like some of the stable economies. But if I want to invest in the Middle East, I would go into buying stable agricultural land, for instance, or something like that.
Okay, Judge Shaban, stable agricultural land, is that good for you?
Well, if I'm looking for stability.
No, Judge Shaban, please continue.
No, I agree with Dr. Taimur. When investors are facing troubled times, this is like from ancient history, they buy land, and the real estate seems a good option now. But also I would think that, keeping your money in local currencies, in local bank accounts is also a good idea. Like, term deposits in local currency, because these, they're always backed by local government and local central banks, so you avoid exchange rate risk. So this could be also another option.
So, Dr. Taimur, in about 20 seconds, what's your view? Would you keep it local?
No, I would. I don't like to put all my money in the same basket. I will put some money in deposits in the local banks, certainly. I would put some money in U.S. Treasury bills, which is certainly safe. And then I would enter the market now, the stock market. And actually, that's already happening. I think the prices now are quite attractive. And unless you assume a doomsday scenario for the whole world, you should get in now.
All right,
not all your money, but put 20% there.
All right, Dr. Taimur, sounds like you're a pretty canny fella. Thanks very much indeed. And thank you all for your time, gentlemen. And thank you for watching this edition of Inside Story. We'd love to hear from you. Email us at insidestory@aljazeera.net. Bye for now.